Honorable Speaker, sir, I now present my proposals on direct taxes. New Income Tax Act. In July 2024, I announced a comprehensive review of the Income Tax Act 1961. This was completed in a record time, and the Income Tax Act 2025 will come into effect from 1st April 2026. The simplified income tax rules and forms will be notified shortly, giving adequate time to taxpayers to acquaint themselves with its requirements. The forms have been redesigned such that ordinary citizens can comply without difficulty. Ease of living. I propose that any interest awarded by the Motor Accident Claims Tribunal to a natural person will be exempt from income tax, and any TDS on this account will be done away with. I propose to reduce TCS rate on the sale of overseas tour program package from the current 5% and 20% to 2% without any stipulation of amount. I propose to reduce TCS rate for pursuing education and for medical purposes under the Liberalized Remittance Scheme, popularly known as LRS, from 5% to 2%. Supply of manpower services is proposed to be specifically brought within the ambit of payment to contractors for the purpose of TDS to avoid ambiguity. Thus, TDS on these services will be at the rate of either 1% or 2% only. I propose a scheme for small taxpayers, wherein a rule-based automated process will enable obtaining a lower or nil deduction certificate instead of filing an application with the assessing officer. For the ease of taxpayer holding securities in multiple companies, I propose to enable depositories to accept Form 15G or Form 15H from the investor and provide it directly to various relevant companies. I propose to extend time available for revising returns from 31st December to up to 31st March with the payment of a nominal fee. I also propose to stagger the timeline for filing of tax returns. Individuals with ITR 1 and ITR 2 returns will continue to file till 31st July, and non-audit business cases or trusts are proposed to be allowed time till 31st August. TDS on sale of immovable property by a non-resident is proposed to be deducted and deposited through resident buyers and his or her PAN-based challan instead of requiring a TAN, which is a temporary accounting number. To address practical issues of small taxpayers like students, young professionals, tech employees, relocated NRIs, and such others, I propose to introduce a one-time 6-month foreign asset disclosure scheme for these taxpayers to disclose income or assets below a certain size. This scheme would be applicable for two categories of taxpayers, namely, A, who did not disclose their overseas income or assets, and B, who disclosed their overseas income and or paid due tax but could not declare the asset acquired. For category A, the limit of undisclosed income or asset is proposed to be up to 1 crore rupees. They need to pay 30% of fair market value of asset or 30% of undisclosed income as tax and 30% as additional income tax in lieu of penalty, and would thereby get immunity from prosecution. For category B, asset value is proposed to be up to 5 crore rupees. Here, immunity from both penalty and prosecution will be available with a payment of fee of 1 lakh rupees. Rationalizing penalty and prosecution. Multiplicity of proceedings are hindrance to the ease of doing business. I propose to integrate assessment and penalty proceedings by way of a common order for both. There will be no interest liability on the taxpayer on the penalty amount for the period of appeal before the first appellate authority, irrespective of the outcome of appeal process. Further, quantum of prepayment is being reduced from 20% to 10% and will continue to be calculated only on core tax demand. As an additional measure for reducing litigation, I propose to allow taxpayers to update their returns even after reassessment proceedings have been initiated, and an additional 10% tax rate over and above the rate applicable for the relevant year. The assessing officer will then use only this updated return in his proceedings. There is already a framework for immunity from penalty and prosecution in the cases of underreporting. I propose to apply this framework for immunity to misreporting too. However, in such a case, the taxpayer will need to pay 100% of the tax amount as an additional income tax over and above the tax and interest due. Penalties for certain technical defaults, such as failure to get accounts audited, non-furnishing of transfer pricing audit report, and default in furnishing statement for financial transactions are proposed to be converted into fee. I propose to rationalize prosecution framework under Income Tax Act while maintaining a careful balance for deterrence in some serious offense. Non-production of books of account and documents and requirement of TDS payment where payment is made in kind are being decriminalized. Further, minor offenses will attract fine only. The remaining prosecutions will be graded commensurate with the quantum of offense. They will entail only simple imprisonment with maximum imprisonment reduced to 2 years and power to courts to convert even those into fines. There is no penalty. There's no penalty presently for non-disclosure of non-immovable foreign assets with aggregate value less than 20 lakh rupees. I propose to also provide them with immunity from prosecution with retrospective effect from 1/10/2024. Cooperatives. Deduction is already allowed to a primary cooperative society engaged in supplying milk, oilseeds, fruits or vegetables raised or grown by its members. I propose to extend this deduction to also include supply of cattle feed and cotton seed produced by its members. I propose to allow inter-cooperative society dividend income as deduction under the new tax regime to the extent it is further distributed to its members. I further propose to allow exemption for a period of 3 years to dividend income received by a notified national cooperative federation on their investments made in companies up to 31/1/2026. This exemption would be allowed only for dividends further distributed to its member cooperatives. Supporting IT sector as India's growth engine. India is a global leader in software development services, IT-enabled services, knowledge process outsourcing services, and contract R&D services relating to software development. These businesses and their segments are quite interconnected with each other. All these services are proposed to be clubbed under a single category of information technology services with a common safe harbor margin of 15.5% applicable to all. The threshold for availing safe harbor for IT services is being enhanced substantially from 300 crore rupees to 2,000 crore rupees. Safe harbor for IT services shall be approved by an automated rule-driven process without any need for tax officer to examine and accept the application. Once applied by an IT services company, the same safe harbor can be continued for a period of 5 years at a stretch at its choice. For IT services companies who want to conclude advanced pricing agreement, APA, I propose to fast-track unilateral APA process for IT services and endeavor to conclude it within a period of 2 years. The period of 2 years can be extended by a further period of 6 months on taxpayers' request. I propose to extend the facility of modified returns available to the entity entering APA to its associated entities also. Attracting global business and investment. Recognizing the need to enable critical infrastructure and boost investment in data centers, I propose to provide tax holiday till 2047 to any foreign company that provides cloud services to customers globally by using data center services from India. It will, however, need to provide services to Indian customers through an Indian reseller entity. I also propose to provide a safe harbor of 15% on cost in case the company providing data center services from India is a related entity. To harness the efficiency of just-in-time logistics for electronic manufacturing, I propose to provide safe harbor to non-residents for component warehousing in a bonded warehouse at a profit margin of 2% of the invoice value. The resultant tax of about 0.7% will be much lower than in competing jurisdictions. To provide fillip to toll manufacturing in India, I propose to provide exemption from income tax for 5 years to any non-resident who provides capital goods, equipment, or tooling to any toll manufacturer in a bonded zone. To encourage vast pool of global talent to work in India for a longer period of time, I propose to provide exemption to global, non-India sourced income of a non-resident expert for a stay period of 5 years under notified schemes.